Walk us through the announcements and how you expect that to impact the holiday quarter.
Yeah, that's a good question. So what we saw is basically part two of Apple's new strategy for its results, right? They started this last year. They realized iPhone unit sales weren't really growing. So how do we keep growing as a company? Well, we raised the prices because we know people aren't going to buy fewer iPhones. We just know that we're not going to grow in terms of unit sales numbers. So what they did for their Macs was raise the prices significantly. So the new Mac Mini is $300 more than the previous model. The new MacBook Air is $200 more than the previous model. The iPad Pro is now $150 more than the previous model. So even if they stick around at equal unit sales to what they were getting before, their revenues are still going to rise. And we're going to see that play out tomorrow because Apple's expected to report between 18 and 20% year-over-year revenue growth. But we know iPhone unit sales growth is going to be stagnant from last year.
Now, Tim, we've got 2 quarters in play here. We're going to get the report for the current quarter. This is typically the slowest quarter before the big holiday quarter, but we will get that forecast for the holiday quarter. What are you expecting?
Well, look, we're expecting higher ASP. As Mark was saying, is going to be the story for earnings. I mean, we're going to be looking for 4 things tomorrow. It's going to be iPhone ASP, it's going to be China, it's going to be services, and then it's going to be guidance. In terms of ISP, Apple, as Mark has mentioned, has been raising prices significantly for the past 2 years. We think that those prices are still undermodeled by the street, and that seems like a source of upside for the quarter. China's a little bit of a different story. China's been on a tear, 20% revenue growth for the past 2 quarters. The question is, however, in the September quarter, with the dollar appreciating 5% against the RMB, and in a situation where you have these price increases, what does demand shape up? How does demand shape up in that type of environment? For services, that's the reason why we want to own this stock. We're looking for strong growth there. You could see some chippiness out of China in terms of mobile game revenue, and then guidance will be very important. We're actually conservative on iPhone units, but we're going to be looking for about $94 billion of revenue, about 1% higher than the street.
Mark, Tim Cook has come out swinging out at companies like Facebook and Google, criticizing them for their business model, how they're profiting off data that users share with those companies. Mark Zuckerberg hit back on the earnings call, talking about how iMessage is actually Facebook Messenger's biggest competitor right now, and also playing up WhatsApp being encrypted, and that Apple stores iMessages in China of Chinese users on servers in China. What did you make of that?
Zuckerberg is absolutely right. I think one of the undertold stories about Apple is sort of how hypocritical it is, how they're storing their data in iCloud in China. They haven't been exactly clear about where that's being stored. There's been some indications that it's from companies that are state-owned, perhaps companies that are not state-owned. It's just not entirely clear at this point. But he also raises a good point about iMessage and how sticky that is for Apple's hardware sales. Imagine if Apple, besides leading to people continuing to buy iPhones, used iMessage as a point of monetization. The most fascinating thing that I'm looking for in Apple's earnings results is services topping $10 billion for the first time in a quarter. And keep in mind how impressive that is, given Apple hasn't done anything new in services in a number of years. So imagine what happens when they start actually doing new things in the category.
Tim, does the threat of WhatsApp or Facebook sort of drawing a line in the sand between iMessage and its own messaging service, does that concern you?
Well, look, I think that services is the key reason why you own this stock. We're not concerned about WhatsApp. Well, what we think with services is you look at something like Apple Music, right? 3 years old, 50 million paid subscribers. You can compare that. You compare that to Spotify. It took them 12 years to hit 83 million subscribers. It underscores the power of distributing services inside of Apple's ecosystem, and we actually think that Apple Music is a subpar competitor in the category. So as Apple rolls out more services over time, as you get more user adoption, we think that services can ultimately, by fiscal 2022, account for 25% of revenue, 45% of gross profit. And the kicker is that these are internet and software services, right? And as the business mix shifts towards those businesses and away from the hardware business, we think that investors could be rewarded with a higher multiple. And if that's the case, you're talking about a services business that could, by itself, be worth around $177 per share by fiscal 22.